Good afternoon, ladies and gentlemen. A very warm welcome to all of you on our Diwali Special Market Guru, where you get to meet the finest professionals on Dalal Street, individuals who've made tons of money for their long-term shareholders, unit holders, as also navigated bull markets, bear markets, volatility, sideways markets with equal aplomb. We are joined by Mr. Dinshaw Irani, CEO at Helios Capital from Mumbai. A very warm welcome to you, Mr. Irani, and of course, festive greetings. How are you analyzing sentiment at this point of time? Is the phase of bad news over at least?
Sure, and a very good afternoon to you and your team and the viewers, and season's greetings in advance for the coming festive season. So, Shailendra, actually, what we are looking at, and in fact, be very clear about this, is the fact that I think the market has navigated the worst of news. I mean, starting from the tariff battles with the US, I mean, sorry, calling it battles, but actually that's what it was, and the additional 25% that was levied on us, and then the bad quarters which came by. I think the market's done fairly well to remain in a very tight band, consolidated at these levels. And from here on, actually, our feel is that if anything, I think probably the worst is over. And market is probably waiting for triggers of good news coming by. Coming to the good news bit, I think it'll be, obviously the festive season has been fairly good for the markets. Obviously, there was a real pent-up demand which came by, but unfortunately, the last quarter was basically there was a standstill for around a month and a half of new orders coming by, new consumption coming by, because the PM announced on 15th of August the cut in GST expected during the festive season. So all the demand that was supposed to come by got preponed to 22nd. That's when the GST cuts really happened. And then one saw a surge of demand coming through. In fact, it's taken the retailers by storm. I've been just reading about it that logistics issues are cropping up and stuff like that, which is very healthy problem to have, not for long, but hopefully that's going to be sorted for in a short while. But having said that, I think the quarter which we were looking at probably early teen kind of growths, because of this postponement of demand, will be probably looking at healthy single digits. I mean, as in a higher single digits, kind of 8-9% kind of growth in earnings. And hopefully the cut in estimates, which has always been a problem for the last 4 quarters, the forward estimates normally get cut. This time around, I don't think that's going to happen. So that's the first set of good news that one will see, and probably it will be followed up by tariffs. I'm sure there's a lot of negotiations going on right now, and we'll probably hear some good news. I'm not sure about it, but this is what I've been reading about it. So,
Mr. Irani, how is the overall AMC portfolio now positioned for the second half? The reason why I asked this is that we were taught that interest rate cuts trigger a rally. That's happened both on the income tax side as well as the GST, as well as the overall cut of 100 basis points in the borrowing costs. Apart from that, you've had a very nice monsoon. So, have you, over the past 2 odd months, taken advantage of falling prices and retweaked the portfolio at the AMC level?
So, Shailendra, actually, good you asked us that question, because obviously cut in interest rates do impact the banks for a very short while. I mean, as in the NIMs take a hit for a short period as such, and that's why I believe this quarter you will see the bulk of that hit being taken by the banks, and that's why that holdback on the profits front also to that extent. But having said that, we did move our BFSI portfolio more towards the financial services than from the banks. So you saw weight in banks going down, financial services moving up. Plus, the fact was that we always been heavy on domestic consumption, and that's what we continue to harp on. And as a result, quite a few domestic consumption stories which we were holding on to got added to, plus new names also got added to especially in the two-wheeler space. Never in our life have we held four two-wheeler companies in one go, and now we got all four of them, all the major four, two EV players and two obviously ICE plays as such, and that's working out perfectly for us. So this is how we've been repositioning our portfolio. One thing, Shailendra, you forgot was on the RBI front was the amount of liquidity that they've infused through the
Yes,
CRR
correct.
cut. I think that also has been a phenomenal play in terms of demand coming back in a big way. So.
Mr. Irani, 5 or 6 major positives, very strong macro tailwind, yet our foreign friends continue to remain very bearish. I'm wondering if Mr. Arora should arrange for a dinner in Singapore and then call all these guys over and ask them, भाई problem क्या है? 4 साल से बेचे जा रहे हैं, मतलब परेशान हो गए हम तो.
So, Shalila, let me fill you in out here. Actually, we started a new fund, offshore fund. I mean, as in investing in India, India Focus Offshore Fund, in November of last year. It got seeded at some $30 odd million, and today that fund has crossed $150 odd million. Obviously, there's some gains also involved in that, but the fact is that we've seen inflows coming in. And having said that, I think the outflows also are a bit skewed, because what happens is that when you talk about FPI outflows, they're not only FPI alone, they're also insider selling. There's basically the PE guys who sell out when the company lists. Those are clubbed as FPI. So if you break the two up, I mean, year to date, I think the overall selling has been around 2,70,000 crores or something, of which I think the insider selling, which is mainly the promoter and the FDI, that is the PE guy, selling out is around 1.3 lakh crores. So that is a bulk of the selling as such. So I don't think it's a big issue. But having said that, yeah, that even that 1.4 lakh crores is a big amount if you talk about the last 6 months. But the fact is that if India starts showing growth, obviously our underperformance this year has been a phenomenal. I mean, if you look at the last 1 year, I think we underperformed the EM index by 30%. In my lifetime of 30 odd years, 3 odd decades that I've been in the markets, I haven't seen such a huge underperformance. So obviously it's a matter of time before it reverses. In terms of valuations, we are in sync with the last 12, 13 year averages now. So I think more or less we are there. And obviously the FPI is also waiting for some trigger. I think the biggest trigger will be when US reverses the 25% penal duty that is on us, and India starts showing growth again. So I think that's how it is going to work. So it's a matter of time before they come back in. That's what I'm trying to say.
I think that's a very sensible and practical approach. We wait for this 25% extra sanctioned tariff to be removed, and then probably the rally will be triggered back. At the same instance, Mr. Irani, when we've had a sideways to negative move on the Nifty plus the small caps and the mid caps indices, gold and silver have taken the pants of fund managers. So it's a double negative in the sense that we missed that rally of 50-55% on two precious metals, and on the equity side we went down. At this stage, how do you feel? 7 weeks of continuous gains on gold, ditto on silver. Does it look stretched to you?
Actually, Shailendra, I still think there's some steam left in the precious metals, given the fact that more and more central bankers, which are the biggest buyers in the precious metals today, are stocking up on this commodity per se, and that's mainly because of the fact that they want to move away from, I think, dollar reserves to gold reserves. In fact, one big data point that has been shared globally has been that the gold reserves have now exceeded the dollar reserves for most central banks. So it's obvious that there's some steam left out there. And secondly, obviously, the uncertainties cropping up on the international trade front, they're not good for obviously equity markets, and they're uncertain times are the ones when gold really is the go-to kind of an investment. So I think that's what's playing out. But frankly, my feel is that maybe, I mean, I'm obviously it's too early to call it out, but I think probably another couple of quarters of this rally, and then probably you'll see some semblance coming back. As in, I don't see a correction though, but I believe that there'll be a flat lining in gold also going forward.
Yes, I think, Dinshaw ji, this is very well put, that the trigger is that, instead of being a passive investment, gold is now an active hedge versus the US Treasury and the dollar. And this trend does not seem to be, sleeping
Abating.
quietly because
Right.
of what Mr. Trump does regularly at 11 p.m. our time. So that's well said. But as an equity investor and an allocator, how are you grappling with this? One way would be to launch a silver and gold ETF.
No, so Shalini, we tell our investors just this, that look, you can't have 100% in equities, though we would love to have 100% in equities. But the fact is, you should always diversify your bets, right? So basically, see, gold, you can't also have 100% in gold, right? Because it's a passive kind of an investment. It's not obviously, there are phases when gold does very well, and there are phases when it falls off, though in India, because of dollar denomination, the gold has always appreciated rather than gone down in INR terms at least. Though in dollar, there's been phases when after that 70s disconnect between gold and equity markets, 80s was a very bad year for gold. But Indian INR, it was pretty good, right? So anyway, so that's what I'm saying, that you can diversify your bets, but obviously equity, in the longer term, our belief is certain that it will definitely outperform any form of investment. And if you ask me how much is long term, I would say the term needed, the amount of time needed for equities to outperform gold is probably what the long term should be like. So that way.
Our better halves, especially the better halves of all fund managers in India, they laugh behind our backs. They are too pleasant to laugh in front of us. But a single buy, no trading, and nothing at all, and what a rally. Anyway, be that as it may, Mr. Irani, chart for us the future ahead. The GST cuts are in place, and many fund managers such as you have also stepped into untouchables, Hindustan Unilever, Nestle, in the hope that food habits will now move up given the GST cut. How are you? You mentioned that autos, especially two-wheelers and NBFCs, make practical sense. How about consumer durable companies? How about FMCG stocks? How are you watching them?
So basically, Shailendra, the fact is FMCG obviously is a total no-no for us. I mean, we have only one FMCG play, which is mainly Marico. And that also is because of the way the volume growth has happened out there. And it's a total rural-based play rather than an urban-based play, right? So that's what our call out on Marico has been, and that's why it's been there for the only FMCG play which has been in our portfolio. Apart from that, we don't have any, and our belief is very clear that just because you save doesn't mean that you will be spending more on brushing your teeth, or rather you'll be brushing your teeth 3 times a day instead of twice a day. So that is what the thing is. Maybe you'll upgrade, but the fact is that upgrade also is limited because you want to now spend on something new. So more of discretionary rather than on FMCG, right? And that's why in the discretionary space, we have also again fairly different kind of discretionary spend like tourism, hotels and all that. I think that is a big play for us going forward. We are not too keen on the big ticket white goods or for that matter autos. Autos, we are only into two-wheelers. As I said, the entry level is, I think, where the real play is as such, and that's why the two-wheeler plays for us. But even in the discretionary, I mean, as in white goods, probably ACs is the only big play which can turn things around in the equity markets. But unfortunately, this is not the season for ACs, right? So it'll only start in summers, and we'll take a call then when that happens. And one has seen also in this time around, also despite the cuts in prices, AC offtake hasn't happened that great. But TVs have done very well. I mean, the big screen TVs and fridges, iron fridges, they've done. So I think one of the new plays which is going to list very shortly will be a very interesting play to look at. going forward. So these are the kind of plays we are looking at rather than a pure simple FMCG or auto play and stuff like that.
Okay. Mr. Irani, I am observing the top 5 holdings of Helios Mutual Fund in terms of assets deployed by you. 2 private sector banks and the third is Paytm and the fourth is Zomato, now Eternal of course. My information is dated, but this is the latest that is available in the public domain. You seem to have a lot of fondness for India internet space, even
So
at
Shailendra-
these valuations.
Right, right. Shailendra, this is something which India has given the world. It is something different which India has given the world as such. And something, obviously China had it earlier, but now the growth rates in China are now fizzling out. India is where the markets are still nascent and the pickup is happening. Like I was just reading up on the internet usage in the country. I mean, we have got 900 plus million users in the country, while the I think the regular users are some 300, 400 million users, right? That's huge. That's like whole of US using the internet on a daily basis, right? And plus you have a player like a Eternal or for that matter a Paytm, where the regular users are 2 million odd or 3 million odd and stuff like that. So you've got a long way to go in terms of growth out here. So obviously, and as I tell everybody jokingly that imagine a fund manager in the US trying to raise money in India and going and saying, look, I'm going to buy cement companies, I'm going to buy utility companies, and the investor out there will say, so what, you get that out here and in here also. What's new out there? That's why I think these are the ones which will take away a big cake of flows whenever it comes by.
And I distinctly remember having a conversation with you and your partner on Eternal when it was 180 rupees. There was a very strong bet that was placed by Helios Capital on Eternal, and it's paid out handsomely. You are even at current levels, from the portfolio that is visible for the month of August, the fund continues to add into this particular stock. Mr. Irani, the days of are the days of going for value buying over? You mentioned in your previous answer, मैं steel or utilities or cement में क्या दिखाऊं? But these were the bedrock of our growing up days in the markets. Somehow the GST cut has not impacted steel and cement at all, especially cement. How do you analyze this?
So Shailendra, okay, let me put it in a different way. If you look at the India MSCI index, MSCI India index, it quotes at a premium of 60% to EM, right? Still, despite the underperformance, massive underperformance, the premium remains at roughly around 50-60%. I don't hold the number to this, but it's around that much, right? The fact is that this premium is commanded because of these kind of new age companies, which nobody else has in their indices in a big way. I mean, Taiwan is semiconductor heavy, China is commodity heavy, or banks heavy and stuff like that. So obviously, India is a different ball game altogether when it comes to premiums. I think this is the way forward, and that's why we love these kind of stories. And I don't think there will be phases, obviously, when value will play out to an extent. But even when we are asked whether we are growth or value players, we are very clear that we try to buy growth at a value. So it's not that we are pure growth plays as such. But there should be some value in that growth, and that's why we pick those stocks up. And though you may say that, look, Paytm or Zomato, they are very highly priced, but the fact is the potential of growth is very huge out there. So that itself will just...
Maybe you look for value in growth stocks when they correct.
Sorry, come again? I didn't catch that.
I'm saying maybe you look for value in growth stocks when they correct.
Oh yeah, that is certain. That's a given. That's a given. But it's not that we wait for the corrections in a way. But obviously when they come by, it's like a godsend for us. So.
Yeah, because in the last 18 months that we've interacted, I remember 4 very clear investments. There was Zomato, there was Paytm, there was PB Fintech, and there was Car Trade.
Yes.
Right? I mean, somewhere near whatever is the most recent multi-month low, the purchases were done, right? So
Right.
that's also a way of looking at value. कि भाई आपको 1800 रुपए का मिल रहा था पहले, अब 1300 रुपए का मिल रहा है, तो why not?
Growth at the value. That's what I said.
Okay. Now, sir, how about NBFCs? One constant refrain that I have heard from your peer group is that GST cut हो गए, सब कुछ हो गया. मैं इंडिविजुअल स्टॉक में क्यों जाऊं जहां पे बहुत ज़बरदस्त कंपटीशन है. Let's look at NBFCs. That's a clear play. Consumers will get their products financed. So how is that getting reflected at Helios Mutual Fund?
So actually, Shailendra, if you remember, that was the first thing I stated,
Yes.
that we've been shifting our focus more towards NBFCs. Not only because of obviously the interest rate cuts, because these guys are nimble, right? They're both sides of the leg of the book are short cycle, so they can very well adjust to these interest rate cycles. The biggest constraint they were, however, facing earlier, because of the liquidity issue, was to raise money as such. And with the new governor coming in and infusing so much of liquidity in the system, that problem went away for them. Now, with the GST cuts, obviously the demand for the consumer goods is going to go up. These guys are the front line for consumers, right? They're actually the ones who finance the consumption. And that's why we like these plays. Obviously, we got the largest of them all, which is Bajaj Finance. And we also got smaller players with us, which are into gold financing and stuff like that. So I think we are pretty much full of those stocks. And obviously, what we've been very careful about is not to do carpet bombing, but to selectively pick up these stocks wherever they manage their asset quality in the past, during the toughest of times. Those are the stocks you want to get into and nothing beyond that. Because excesses lead to these kind of problems at a later date that we don't want to face.
Right. Irani Sahab, time draws to a close, and it's always such a pleasure to listen to your wonderful views and to look at that wonderful smile. Thank you for your time, and here's wishing everybody at your team the very best for the festive seasons ahead, and of course to you and Mr. Arora.
Thank you, Shailendra, and all the best to you guys also. Thank you.
That, ladies and gentlemen, was Mr. Dinshaw Irani, CEO at Helios Capital and also at Helios Mutual Fund. A very interesting conversation. I hope you enjoyed it as much as I did. Thank you for watching. Stay glued to BTTV.
बिहार के चुनाव 2 फेजेस में होंगे.
The bugle has finally been blown and Bihar goes to poll in November. In the two-phase election, voters will cast their mandate on 6th and 11th of November, counting